Every trading strategy has one thing in common: victims. Behind every perfect setup and every undefeated indicator, there is a person staring at a screen, watching their life savings evaporate into a cold digital void. The market doesn't care about your rules, your goals, or your dreams. It only cares about liquidity, and most of the time, that liquidity is you. Level 1. The blind disciple. I was told from day one, the trend is your friend. It sounded so simple, almost like a religious mantra: buy when it goes up, sell when it goes down. I studied Richard Donchian. I followed the moving averages like they were scripture. I believed that as long as I swam with the current, I couldn't drown. But the market isn't a river. It's an ocean that can turn into a stagnant swamp without warning. I spent months catching trends that were actually just sideways, choppy death traps. I'd wait for that beautiful moving average crossover, enter with a massive lot size because I was sure, and then nothing. The market would just sit there, mockingly flat, eating my account alive with swap fees and commissions. I became Jesse Livermore, convinced I had beaten the market during one lucky run, only to lose everything when the trend finally bent. I learned that the trend isn't your friend. It's a fair weather acquaintance that leaves you the moment things get difficult. I suffered through the emotional exhaustion of watching a 100 pip profit evaporate because my rules told me to wait for the trend to weaken. By the time it weakened, I was already underwater. The mean reversion trader. I believed in the rubber band theory. Price moves too far from the average and eventually it has to snap back to fair value. I lived by the RSI and Bollinger Bands. If the market was overbought, I sold. If it was oversold, I bought. I thought I was smarter than the sheep chasing the trend. What I didn't realize is that a rubber band can stretch far longer than your bank account can stay solvent. I saw a small dip and thought it was the perfect entry, but it wasn't a dip, it was a collapse. I became Nick Leeson, doubling down on losing positions, praying for a reversal that never came. One more trade and I fix everything, I'd tell myself, while the margin calls started screaming. The math said it was impossible for the market to keep going, but the market doesn't read math books. I trusted the numbers, but I ignored the risk. I learned that normal is a subjective term in a world of black swans. My high win rate was a drug that made me believe I was invincible until one single rare event wiped out 3 years of gains in 3 hours. The breakout trader. I lived for the breakout. I'd find a key level of resistance, draw my little rectangle, and wait for the explosion. I believed that once the dam broke, the flood would carry me to millions. I was chasing the rush of momentum, the feeling of catching a move at its absolute birth. What actually happened was a never-ending cycle of fake-outs. I'd see a strong body closure above my line, jump in with maximum leverage, and then watch in horror as the next candle wicked me out and reversed. It was a liquidity grab, and I was the feast. I felt diddled by the market every single time. I became Bill Hwang, putting $20 billion on the line because I thought the breakout was guaranteed, only to watch it vanish in 48 hours. I learned that most breakouts are just the market reaching into your pocket. My mistake wasn't the entry, it was the arrogance of not waiting for the retest. I was so busy trying to be early that I ended up being wrong.
The scalper, the adrenaline junkie. I was a listening device with a heartbeat. I thought that if I could just catch 2 or 3 small moves a day, I'd be rich. I lived on the 1-minute and 5-minute charts. I believed that more trades equaled more money. I thought I could exploit micro inefficiencies and outrun the big banks. The reality? I was a tourist in a world of high-frequency predators. I spent 6 hours a day staring at candles until my psychology was completely cooked. I'd win 7 trades in a row, making pennies, and then lose it all on one trade because I was too scared to set a stop loss on such a tight time frame. The stress was soul-crushing. I became numb to human life because I was too busy watching pips fluctuate.
I was overexposed, revenge trading every time a spread ate my profit. I learned that you don't make money by getting involved in the market. You make money by letting the market move while you do nothing. I was just a cog in a machine that used my anxiety as fuel. The swing trader. I wanted the balanced lifestyle. I didn't want to be glued to the screen. I wanted to hold trades for days and catch the big waves. I believed that by trading higher time frames, I could find the sniper entries and walk away with 6 figures. I felt like a whale in training. But patience is its own kind of torture. I'd wait 3 weeks for the perfect setup, finally enter, and then spend the next 3 days in a cold plunge of drawdown. I'd set my set and forget take profit, only to close early out of fear, and then watch the trade hit my original target and triple my account while I sat on the sidelines. I suffered through the broker's slippage during the nights I tried to sleep. I learned that setting and forgetting is easy to say, but impossible to do when you have $1,000 floating in the red. I was haunted by the what-ifs. I learned that the market will wait until the exact second you lose hope before it finally makes the move you predicted. The algorithmic trader. I believed in math over emotion. Why rely on a human brain when a bot can execute a model with 100% precision? I spent years backtesting, skipping through thousands of candles, convinced I had found the Holy Grail. I thought I had removed the human element from the equation. Then the flash crash happened. My bot, programmed for perfect conditions, met a reality it didn't understand. The model said the move was impossible, and then it happened anyway. I realized I didn't control the market. I was just a passenger on a plane with a glitchy autopilot. I was Victor Niederhofer, a brilliant mind wiped out by a market that didn't care about my statistics. I learned that backtesting is a false expectation because it doesn't account for the patience or the slippage of real life. My bot had no emotions, but I certainly did when I woke up to an empty account. I was just another cog in a machine so large I couldn't see the edges. The price action trader. I looked down on everyone. No indicators, no patterns, just pure price action, baby. I studied market structure like it was a secret language. I talked about higher highs, higher lows, and the snake trick like I was a god of the charts. I believed I could read the heartbeat of the fight. But the problem with reading price is that you eventually start seeing ghosts. I'd talk myself into a trade that made perfect logical sense, ignoring that I was actually selling at the absolute bottom of a support level. I became a mad scientist explaining my confluences to people who didn't care, while my P&L bled red. I took a $153,000 loss on a trade that made no sense because I was too arrogant to admit the trend had shifted. I learned that price action is subjective. It's a mirror that only shows you what you want to see. I thought I was an expert, but I was just a man guessing which way a coin would land, while using fancy words to describe the spin.
The news trader. I believed that information is power. Why look at old candles when the real moves happen during interest rate decisions and NFP? I thought I could outrun the news cycle. I believed that if the news was good, the market would go up. The market, however, is a mystery box. I saw positive data come out, bought with everything I had, and then watched the market diddy me with a 50-pip wick in the opposite direction. The brokers widened the spread so much that I was in a loss before the candle even moved. I was the retail victim of the Terra Luna collapse, holding on to stable promises until they hit zero. I learned that fundamentals usually follow technicals anyway, and by the time the news hits the screen, the move is already dead. I was gambling on a door I couldn't see through. I learned that in the storm of a news event, the only thing that gets impacted is your sanity. In the end,
Trading isn't a battle against the big banks or the algorithm. It's a battle against the person in the mirror. Every strategy works until it doesn't. Every victim believed they were the exception to the rule. We all want to believe there is a secret formula or a hidden pattern that will protect us from the inherent chaos of human greed. But the market is not a puzzle to be solved. It is a reflection of our own psychology, our fear of missing out, our inability to accept a loss, and our desperate need to be right. The only traders who survive aren't the ones with the best strategy. They are the ones who realize they are not in control. They set their stop losses, calculate their risk, and then they wait. They accept that the market will take what it wants whenever it wants. So ask yourself, before you click that button, are you the hunter, or are you just the next piece of liquidity? Trade safe, or don't trade at all.